Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. Canadian mining company Fortune Minerals just reached an important milestone with a $16.2 million combined funding from the Canadian and the U.S. governments to advance its NICO project in the Northwest Territories. Joining me to talk about this recent announcement is Fortune Minerals President and CEO Robin Goat. Hi, Robin.
Hi, Marilyn. Nice to meet you.
Great. Good to meet you too. So obviously, let's talk about the important and fascinating news that's you just released. Could you provide us an overview and breakdown of this new funding from the U.S. and Canadian governments and what kind of an impact it will do to your NICO project and to your shareholders in general?
Right. Okay. So our project is actually a completely vertically integrated critical minerals asset. Very advanced. We've spent $137 million to date. But we have a number of improvements that have been made to the project, which I can discuss in a few minutes. But we have three critical minerals: cobalt, bismuth, and copper, as well as more than 1 million ounces of gold as a highly liquid co-product. The project, being vertically integrated, is comprised of a proposed mine and concentrator in the Northwest Territories. And we're going to build a hydrometallurgical refinery in Alberta, which will process those concentrates to produce value-added metals and chemicals. So when you ask sort of this announcement from the U.S. government and the Canadian government, I think our project ticked a lot of boxes. It's a vertically integrated project, as we discussed, so you have processing. It doesn't make a lot of sense to be able to mine and make a concentrate here in Canada if we simply ship that material offshore. In order to have custody and control and to be able to provide critical minerals for our important energy transition industries here in North America, we need more downstream processing. So that's one of the things that kind of, I think, helped with our application to governments. We've also had a lot of engagement with both the U.S. and the Canadian governments, probably for 4 to 5 years now. But the U.S. application alone has been in place for 2 years, and we were an early mover after a program was announced. And then I think another attractive aspect of our project to the government is the relationship we have with Rio Tinto, which makes it a cross-border bilateral development project, which is aligned with the U.S.-Canada collaboration on critical mineral supply. So we are working with Rio Tinto. They have some waste streams which contain similar metals to what we will be producing at our Alberta refinery, and we will be able to increase the production of both cobalt and bismuth, taking the intermediates that have been produced from these waste streams and do the downstream processing at the Alberta refinery.
I think one of the most interesting things with this happening with the U.S. and the Canadian governments is like really it's solidifying all that we've been hearing about, with the governments putting in policies to boost critical mineral supply, domestic critical mineral supply. So this is a great example of what really when the government really puts in an investment into a project.
Well, you've seen some important announcements even just this week. The Biden administration announced significant tariffs on Chinese electric vehicles, 100%, plus 25% on battery materials. I think the Inflation Reduction Act is obviously working. It's encouraging investment into North American supplies so that we can kind of decouple from supply sources that are not necessarily aligned with our industries. So the funding that's been announced will take our project and do the sort of filling in all the gaps that are required, the remaining permitting and engineering, to be able to take this project to a construction decision. And in order to qualify U.S. buyers of electric vehicles, we're going to need compliant sources of raw materials with the battery materials coming from North America. And we've been engaged with even with a number of large companies in Asia that are recognizing this political sort of trend and are looking for North American supply sources right now.
Let's talk a little bit about the Alberta refinery. So you've provided sort of a little bit of a background on that one and your collaboration with Rio Tinto. Could you maybe expand a little bit for our investor community who may not be familiar with it, like what the plans are for that and really the details of the collaboration with Rio Tinto?
Sure. Well, if we start with the Alberta refinery, we have a beautiful analog with Sherritt. Sherritt is operating a refinery in Fort Saskatchewan, effectively the same jurisdiction where we plan to construct our refinery. It's been there for 65 years, and it's been there much longer than the mining sources of supply that were initially producing the feed sources for the refinery. So having this downstream process enables us to process our materials, achieve very good metallurgical performance and recoveries. It also allows us to process custom feed sources like the Rio Tinto relationship is pursuing. And it also allows us to pursue recycling. And we think that recycling is going to be an important source of materials in the future. So our metals are cobalt. We're going to produce a cobalt sulfate heptahydrate. That is the material that goes into the cathodes of high-performance rechargeable batteries. We have more than 1 million ounces of gold, and I'm sure all of your viewers are aware that we're having significant appreciation in the value of gold right now, which is important for our project. We have the largest deposit of bismuth in the world with 12% of global reserves. Most of your investors won't be familiar with bismuth, but it's used primarily in the automotive industry. But it's also in Pepto-Bismol, and the only reason I sort of mention that is that it's scientifically recognized as one of the safest metals on the periodic table. You can ingest it. It has antibacterial properties, but the physical properties are otherwise very similar to lead. And one of the major expansions in the market is in lead replacement, creating an environmentally safe, non-toxic alternative for lead in for example, the alloys used in potable drinking water sources. And the U.S. government has already banned the use of lead in these kinds of alloys, so the brasses and the solders, for example. There's significant use of bismuth in plugging decommissioned oil and gas wells. That's a brand new market, which is really important because bismuth is one of the very few metals which expands when cooled. So when it's deployed, melted, it expands and then fills the porosity and makes a perfect seal, preventing greenhouse gas emissions. So it's a very important metal environmentally. But the wild card that we're all kind of hoping to see commercially developed over the next couple of years is manganese bismuth magnets. And the U.S. Department of Energy has determined that manganese bismuth magnets have better performance, lower cost, less invasive processing to the environment than rare earth elements. And again, we control 12% of the global reserves of this metal. It's already being commercialized by 2 Korean companies, a company in the United States, as well as there's been significant interest in our bismuth from China. But obviously, we're kind of aligned now with the North American geographic vertical integration or siloing. We want our materials to be mined, processed, and made available essentially to support North American businesses.
What about offtake agreements? Like, with the vertical integration, I think one of the missing link with your vertical integration strategy would be, offtake agreements with battery manufacturers or the end users. Could you talk about the strategy, your strategy around that?
Well, I can tell you that we could probably execute an offtake agreement with probably 25 or 30 companies in a microsecond. But we want to have the offtake available for strategic partnerships. So the financing plan for our asset, after we complete all the engineering and permitting work that's being covered by the U.S. and Canadian governments is to seek the project financing, which would probably be a combination of debt, but also equity, and the equity would be primarily related to strategic partnerships with a user. So if somebody like a car company or a battery company or a private equity company wants access to the raw materials that we're going to produce, we want to see some money invested in the project.
So with this new funding from the government, what are the next steps for the NICO and the Alberta Refinery? Could you talk about how does this change or speeds up the trajectory of the timelines for these projects? Could you talk about the next steps then?
Absolutely. So the first thing we'd like to point out, obviously, is over the last few years, we've had very difficult capital markets. There's been sort of a distraction in investment into the mining industry. Well, people have looked at cryptocurrencies and pot and stuff like that. And I think the attention is now coming back into the mining sector. We've already seen significant price appreciation in larger companies, particularly for the base metals. And that is starting to flow downhill into mid-tiers and the larger juniors like Fortune. So what this government funding, first of all, is non-dilutive. It's when we announced this financing, it represented about 50% of our market capitalization and is completely non-dilutive, effectively grants or contribution funding, meaning we prepay it and then it's reimbursed. So initially the U.S. focus was on addressing gaps to take us to project financing, which includes permitting the Alberta refinery. But the municipal planning approvals are already in place because this is an existing brownfield site that's already been designated for heavy industry, and we'll talk about that in a minute as well. Also we're addressing gaps in the engineering, so we need an updated feasibility study. We have the new refinery site, which is very important. We have a new access road that's been financed by the Government of Canada and the Government of the Northwest Territories. We have optimizations that have been recognized in the mine plan, the geological model, as well as the scheduling of our resources, trying to reduce capital costs, but also improving our cash flow scheduling by processing higher value materials or high margin materials earlier in the mine life. So going back to the question specifically, the U.S. government's funding an updated feasibility study, permitting the Alberta site. They're contributing to test work, which is already in progress at Lakefield Research, and it's filling in the gaps in the authorizations up in the Northwest Territories, where we already have an environmental assessment approval, and we have the major mine permits already in place, but there are management plans as well as some gaps in the permitting that we need to fill. The Canadian government came in on the back of the U.S. Financed projects, and they're going to finance what's referred to as feed engineering, where 30 to 40% of the design or detailed engineering is provided to take the project to the point where you can procure equipment and to give greater cost certainty on the capital costs for project financing. The Canadian government is also contributing to test work, which we have in progress with Rio Tinto. We're taking those process streams from the Kennecott smelter in Utah. Rio Tinto would make an intermediate. They would ship that material up to the Alberta refinery, and then we would do the downstream processing to augment our production of both cobalt and bismuth. So the test work needs to demonstrate that we can indeed process this material, which we're confident we can. But also, what is the impact if we blend it? Do we have to batch it, or do we blend it? And we're pretty confident that we can actually blend it with our materials. And so that has to be verified and validated. That work is ongoing right now as well. So that's coming back to the refinery, if I can, because I'm not sure if this was part of the question you had earlier, but the Alberta economy needs to be diversified. It's highly dependent on the oil and gas industry, and we are the natural fit for exactly what's happening there right now. The Alberta's industrial heartland, just north of Edmonton, is an existing petrochemicals processing area, and effectively what we're going to do is the same thing that's happening there right now, except that we're going to produce metals and chemicals from metals as opposed to hydrocarbons. So everything that we need in that refinery is readily available within 15 to 20 kilometers. There's processed water, there's natural gas, there's electrical supply, there's oxygen, there's sulfuric acid, there's lime, all of that in close proximity, and there are tax incentives keyed to capital investment. So it's just the ideal place to construct this refinery, much better than our previous option, which would have been in Saskatchewan. So really looking forward to sort of getting that process up and running, and then addressing the gaps in the engineering and permitting.
Certainly looking forward to hearing more progress as you advance these two projects. Thanks again, Robin, for taking your time and sharing your important news to us today.
Thank you very much.
And thanks everyone for watching. Join us again next time for another edition of CEO Insights. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.